Welcome, dear traders. It's me, Kate Stichina, and you are watching the recap of the Asian session on January 6. The Asian stock market is trading mixed on a Friday. Following a sluggish trade in the Wall Street yesterday, Japan's stock indexes were trading cautiously with a downward dynamic. The New Zealand stock market remained almost unchanged, while Australian shares went up amid a recovery in oil prices. Over the past three sessions, the Australian stock market has been trading with gains thanks to optimistic news from China. Its government has finally eased restrictions on the housing market and cancelled the so-called three red lines. These changes will definitely promote the recovery of the world's second-largest economy and will also boost the trade with Australia. The Chinese authorities have given the green light to limited coal imports from Australia after a two-year ban. Moreover, on Sunday, China will open borders with Hong Kong for the first time in 3 years. This move is seen as a good sign, indicating that China is ready to accelerate trade relations after a long period of lockdowns. In addition, today, the People's Bank of China has made its biggest weekly cash withdrawal on record. Using short-term government bonds, the regulator drained a net amount of 384 billion yuan. The forex market immediately reacted to the news and saw an advance in the yuan, the Aussie and the New Zealand dollar. However, the rise was rather moderate as the upside potential of the Asian market was limited by a stronger US dollar. The greenback advanced amid optimistic jobs data from the ADP. Apparently, markets have played down the fact that ADP's forecast failed to meet official non-farm payrolls several times throughout 2022. Actually, the inaccuracy in predictions forced the automated data processing company to take a break in June and July to revise the correction and processing methods. For example, in July, the ADP report predicted 268,000 new jobs, while official non-farm payrolls actually showed 528,000 new jobs. In November, the difference almost doubled, 127,000 versus the actual reading of 263,000. It seems that investors got used to the fact that US non-farm payrolls turned out to be higher than expected, so this is another bullish factor for the US dollar. Yesterday's spike of the US dollar index after the release of the US statistical data confirmed it. According to the latest FOMC meeting minutes, all Fed policymakers considered cutting the interest rate in 2023 to be unreasonable. According to the meeting minutes, the Federal Reserve will maintain its tight monetary policy until inflation is clearly on a path towards 2%. This indicates that the US Central Bank does not consider the early decline in inflation to be sufficient. If the labor market slows down compared to the levels of December 2022, it will increase concerns over potential interest rate hikes. This will give a boost to the US dollar today. During today's Asian session, the US dollar index moved to 105.20. Traders are likely to be optimistic about the greenback until the non-farm payrolls are released. The dollar may move out of the intraday range of 105 and 105.40 in the either direction in the second half of the day. Early on Friday, the US dollar continued to advance against 6 other major currencies. During the Asian session, the dollar-yuan pair rose within the trading range between 133.30 and 134.40. Today, the Bank of Japan made another unscheduled purchase of Japanese government bonds, and the purchase gave slight support to the yen, but it failed to stem the US dollar's advance. During the Asian session, the Japanese currency was hovering near 134.30. The pair is likely to rise further before the release of the non-farm payrolls. While the Bank of Japan's governor Haruhiko Kuroda sticks to an ultra-dovish monetary policy, the Japanese yen remains weak against the US dollar. The governor's expectations of a higher real income have also not come to pass. The weak yen has pushed down the living standards of Japanese households. The Japanese regulator earlier stated several times that higher wages could boost the living standards in the country. However, real wages fell by 3.8% in November, while nominal wages edged up by only 0.5%, down from a 1.4% gain seen in October. It seems that the Bank of Japan might eventually get a new leadership, which would also change the mood of investors. The Australian dollar surged thanks to news from China and rising commodity prices. However, it faced resistance from a rising US dollar. As a result, during the Asian session, the pair fluctuated in the descending channel between 0.6740 and 0.6789 amid high volatility. Early on Friday, the Aussie retreated and consolidated near 0.6753. During the Asian session, the New Zealand dollar attempted to climb above the nearest resistance level of 0.6250. However, it then retreated to 0.6216. Early on Friday, the Kiwi largely slid down against its US counterpart within the trading channel between 0.6207 and 0.6256. New Zealand is one of China's leading trading partners. The economic activity in China, therefore, dramatically affects the New Zealand dollar. More activity in the forex market is expected to come later today, and this is how the Asian market went on Friday. Follow InstaForex TV to get the news on the trading floors. See you soon.